Very good afternoon. You're watching the newsroom right here on ET Now. I'm Ajay Sharma, and the markets are attempting a rebound. There was a very vicious fall seen in the market since morning. Banks actually led from the front. SBI, BOB, private sector banks. Cement counters also fell for a third day, along with some other group stocks. Adani group stocks also came under pressure, and it was in general a synchronized fall across the market, mid cap, large cap. It is also coinciding with the expiry of the series also right now. But in the last 15 minutes, there has been an attempt of recovery which is happening. In fact, it will be interesting to see. Expiry related volatility is not new in the market. We are just a week away from the budget, and it will be interesting to see what kind of flows actually come. Was this just a intraday FNO based fall, or have flows been on the negative? But the fact shows that last 4 5 days, a week or so, FI outflows have reduced in comparison to few weeks back. But that was the technicals of the market. We'll take stock of the market fundamentals right now ahead of the budget. Vinay Jaising, he's head of the portfolio management services at JM Financial and AIF. He's joining us today on the show to discuss more about markets. Vinay, afternoon. Thanks so much for joining us. Great to have you on the show. Finally, Vinay, I'd like to know from you about an element of the market which is sentiment and fragility. You've been in the market long enough to understand that yes, in the long run, earnings and growth, all of that matters. But in the short term, sentiment, fragility, positioning, all of that also matters. I want a view from you. We are going into this budget with very low expectations from the market side. What are your thoughts on the way, however you may call it that it's a non-event or so, but budget is a directional event and sentiment event for the market, doesn't it?
Absolutely. I think you put it very well. So if I turn back, by a decade or two, the importance of the budget was a lot more. But what the government has done in the last 10 years, they've been announcing everything which is important more at the time it should be announced, then wait for the budget to come out. And hence the budget is becoming lesser important, but clearly sentimental in terms of what you want to hear, in terms of where is the capex going, is infrastructure going to be really the push point? Is it going to be the rural India, which for the last 2 years have not seen a huge increase in the budget? Will that number again go back up? Will the taxation, remain unchanged, or the marginal tax rate for the incremental investor not cut down a little bit? So it is definitely sentimental. I agree with you on that. But the two comments you asked between fragility and sentiments, I'm gonna pause here and think of it as a global investor. In the last year, the year 2022, India went virtually nowhere in the markets, but the rest of the world went down by 15 to 20%. And now you start this year wherein India again is more or less flat for this year. But what's interesting is China, one of the worst performing markets last year, has turned just because they've announced that they're going to be opening up and the markets are up 14%. It's become a darling. Flows, though you said that there's been a bit of a change in the last week, but if you see the flows year to date, India has lost flows, $1.5 billion plus, and flows have gone to Korea, flows have gone to Taiwan, and I'm sure flows have gone to China to more than make up for it. Another market which you would look at last year, which was a key loser, was Nasdaq, which was down last year by as much as 25 plus percent. Now, if you look at it, it's one of the best performing markets, up 8% this year. So clearly, what happened last year was more a function of people looking at taking lesser risk and working on those markets which were less risky, which is where India shine. Now with valuations being where it is, where India is at probably give or take change 95 to 100% premium to emerging market, valuations becoming important. Sentiments that the markets are looking better in China are also changing the coin in the short term for India.
Vinay, what are your thoughts on the valuations banking stocks are trading at? Large public sector banks, SBI, BOB, Canback, that variety. Because the delta on their performance last, say, 4 quarters have been highest. We all know that private sector banks are very efficient and their trend was already going higher. but it's the PSU banks where biggest money have been made, the large cap PSU, and the asset quality trajectory, all of that has. Do you see more value there if the earnings momentum continues? Can more money be made from here on, or you think bulk of that trade is in the price?
Sure, it's an interesting question you asked. We were just discussing this today morning that which is the best performing sector as far as results are concerned. For numbers which have trickled in. So let me share that with you. Banks once again, the basket of all the banks, private and public put together, have grown an impressive 20 to 25%. The big banks have done better. They happen to be private banks, but the big banks have done better than the medium and the smaller term banks. And the rest of India, the earnings have actually gone down if you take the banks out for the first quarter. I'm sure that may change a little bit when all the rest of the results come out. But we are betting on banks, private banks, a little bit more than public banks. But we do like SBI. It is in our portfolio. We are looking at all the banks largely because when you get the largest bank in the country at sub three times price to book, and it's growing, I'm talking about HDFC Bank, and it is growing at 20 plus percent on the loan book growth. Why do you want to look much further? And if you do, in terms of valuations, yes, the public sector banks are looking attractive, especially SBI, and we are looking at that as well. We like that company.
When I'm curious to know your thoughts on the cement space, the large cap cement particularly, the mid cap got excited because of uh, hopes of a big M&A, kind of spree happening. That may happen or not, but yeah, last quarter, in the second quarter, the largest company in the space, Ultratech, came out and raised the guidance of demand, pricing, all of that. That completely re-rated the entire space. But this quarter, in the earnings call, Ultratech said that price hikes are not getting easily absorbed, and that spooked the space. How do you see the pricing demand dynamics in cement space and the large cap 4 5 names, Ultratech, ACC, Ambuja, Variety, on valuation
Sure.
front?
Again, thanks for the question. So think about it. What are we talking about in the macro front? What are we seeing? The first thing we're seeing on the macro front is inflation is coming down pretty quickly. The second thing we're seeing is interest rates are hovering higher. There is a little bit more time for interest rates to move up, and they'll be probably higher for longer. Now, if you use these two parameters and first focus on the inflation coming down, commodity prices may not fall for cement, which means prices will not rise, which was the first comment you made as far as Ultratech was concerned. But the second comment is, what about coal? How has the coal prices moved in the last month, last 2 months, last 3 months? So net of inventory, which would have gone away for all these companies, now they are using coal, which is much cheaper. Coal as a percentage of power is a big component for all these cement companies, and a percentage of top line too. 25 to 30% is the power cost. Now, if that number is going down by almost 5 to 10%, there is 2 to 300 rupees per bag, which these companies will gain, and hence the EBITDA per kilo, can move up from the 7 800 to the 1,000 plus levels. The bigger companies like Ultratech would gain, but that probably orients as well. So I think if the budget pushes infrastructure, as we are seeing a lot more demand come in real estate, we are relatively excited in the cement industry. Two stocks we like are Ultratech and Orient Cement out
Hmm. Vinay, what are the other overweight areas for you in this market, and which also gets reflected in your strategy?
Sure. One of the biggest overweight areas, which we are focusing on apart from banks, is the specialty chemical and the healthcare space. Because for us, we are looking at a China plus one strategy for manufacturing. And when you're looking at China plus one strategy for manufacturing, where do you have a strong prowess is the pharmaceutical or specialty chemical space, both in terms of R&D, know-how, factory space, good quality people, and that's where we are overweight. Stocks we like in that are companies like Archean, companies like Sumitomo, companies like Gujarat Fluoro. We like the fluorine chain, we like the bromine chain. So that's where we are putting a lot more of our bets on. These stocks have also corrected, some of them. So the valuation also for us is looking relatively a lot more attractive than the rest of the space.
Vinay, I have a question there. When you see Aarti Industries, Sumitomo, and many other fluorine related stocks, in the last 3 to 5 years, they have seen multiples expansion. Some have seen earnings, very high earnings growth, and some are not. So, do you see the next leg in the next 2 3 years? It's the earnings growth which may drive many of these companies because bulk of the multiple expansion has already happened.
Sure. Just pardon me. I didn't mention Aarti. We don't have Aarti in our portfolio. I mentioned Archean Chemicals. Archean Chemicals is at a half the valuation probably of Aarti. So we want stocks which exactly I think which you are trying to ask a question on, which are relatively cheaper than the basket of stocks which have done well and which have earnings growth. So in the case of Archean, we have the bromine chain helping them. They get the bromine from seawater, so their raw material costs are less. They're one of the big manufacturers out there. Bromine is a good product. Lots of advantages of it, both in sanitation and otherwise. We like the fluorine chain, and out there, Gujarat Fluoro is probably at 23, 24 times 1 year forward earnings, with the rest of the pack even existing today at about 40 times. So we look at two things, high ROC, good management, good products in them. The cheapest names are the ones we really buy into our portfolio.
Mm, right. Anything you like from the small cap, mid cap end of the market as well? What are your thoughts on the valuation in that space?
So it's interesting. If I were to look at the last 5 years, large cap has beaten mid cap, has beaten small cap. The same trend has happened in the last month. So there's a lot of change which has happened. All of a sudden people were very, very positive on small cap, to mid cap, to large cap in that order. And this trend has actually reversed in the last year and in the last 5 years, as I said, it's been the other way around. For us, at JMPMS, we don't look at market cap as much as we look at leaders or bottom up ideas, as long as it fits with our macro strategy, which I mentioned to you. A couple of small cap names which we like are MTAR Technologies, again, something which we are very proud of. The focus of A, manufacturing, B, clean energy, C, getting into the defense space as well. We like specialty chemicals. Already mentioned both of them are small cap names, Archean and Gujarat Fluoro. Then we like Orient Cement as well. So we got a nice mix of small and mid cap names which we like. Apart from obviously the private banks, most of them are large cap. Even the smallest bank of us, Fed Bank, which we like, or Karur VSI is small, is more a medium term bank than a small cap name.
Outstanding. Vinay, great to have you on the show and thanks so much for your time and look forward to chatting with you on Ichina Swadesh more often from here on. Thanks very much for your
Appreciate your
time
time.
today.
Thank you, everyone.
That was Vinay Jaising of GM Financial Portfolio Management Services and AIF. But let's, before we take a break,